Mr. Gasco. Say, how are you? Mr. Gasco.
Lady Yo, what's up, Mr. Michael?
What's happening? What's happening? What's happening?
I'm okay, bro. What's up?
Good, man. Just want to look at the market so that we know what we're expecting to see this week. So that we make money together in one accord this week.
Yeah,
right.
that's
So,
it.
so I'll just start with US 30, then move to gold. From there, then we'll go to our crash and boom and fix.
Yeah, okay, no problem.
That's okay, brother, man.
So this is US 30. US 30, I can go to the weekly, but no need. I can go to the weekly just to show you. So on the weekly, because we are much more concerned about what is going to happen this week, the trades that are going to take this week. So on the weekly, you can actually see that we had this bearish, I can say this bearish movement from ever since from this time. You can see it was actually giving us lower highs, lower lows, blah, 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 blah. You know all this stuff, right? Then here now, around, let me remove this. This thing just to be up there. Okay, let me just do this. Right. If you check now around August 2022 here, it broke this lower high. Can you see?
Yes.
Right. The break of that lower high was the indication that we are no longer in a bearish market. We are now in a what? Bullish market. Meaning when you're in a bullish market, our impulse moves are going to be the buys, the retracements are going to be the sells. So if ever you take any sell in a bullish market, you have to know that it's simply a retracement. It's not really the main move. The main move there will be the buys. So this is right. So after that now, so after breaking the lower high, we have to come and establish a higher low, right? In order for it to be confirmed as a bullish market. A bullish market is a market with higher highs and higher lows. So this is a higher high because it's higher than this one, right? So after establishing a higher high like this, the market went on. After establishing a higher high, I mean from here, it broke this high, established a higher high here because this was higher than this, right? Because even the body, it actually closed above there. So this was the higher high. I can say this is the higher high here, right? After establishing that higher high, this downward move is simply a retracement now to establish a what? A higher low. Once the higher low is confirmed, the market must continue pushing up like this. So roughly now, we can even put our Fibonacci on the weekly just to see which level the market is actually bouncing from. Point A to point B, you can actually see 50%, which is actually our entry zones. 50% is 1.8. Those are our entry zones when it comes to Fibonacci. You can also see there's a fair value gap here. That's a double confluence already. So already I have three confluences already on this trade. So this buy, if you check this buy, it actually started in March, the 20th of March. That's where one could have actually started buying US 30. Right now, you'd still be holding because you are waiting for 0%. From 0%, we're expecting negative 27%. So negative 27%, that would be the ultimate target for this US 30 trade. So roughly, our target is still yet to be reached, which is negative 27%. So right now, what we now need for US30, we simply need entry points now, the correct entry points on our lower time frames. So on the weekly, I've done an analysis already. Then I can actually see that this is a resistance. This resistance, I got it on the daily, also have that resistance. This is my target, remember, negative 27, right? Going down to the daily, 4 hour, whatever. I'm simply going down there to identify entry zones now, entry zones. I now need entry points. So now this is the daily time frame resistance. I have this resistance as well. So now just a zoom in. If you check this retracement, the retracement that we saw on the weekly, this is the move. Lower low, lower high, lower low, then here we broke this lower high. That was the retracement, right? So two possibilities now are there. After breaking this lower high here, like this one, after breaking this lower high like that, there are now two possibilities. The market can push into the resistance, respect the resistance, drop down before maybe continuing up. First probability. Second probability, it can break the resistance, retest, and continue pushing up until we reach negative 27%. So now, if ever it's going to go down, where can it go to? We have a demand zone here. It can come and test this demand zone before going all the way to the upside. So let's say that move is going to happen. We'll be looking at something like this. Point A to point B. Your point B will be this resistance. Your point A is down, point B there. So now, if ever this move happens, we'll be looking to also, so meaning the sellers that will enter, obviously, will look at lower time frame confirmations. Want to enter the sales, we will be looking forward to something like maybe 61.8. Once we touch there, we're expecting a shoot up all the way there. So this is one probability basing it because of this resistance that is here. So if this resistance is strongly respected, the market will drop and come back to test that demand before continuing all the way up. So now going down to 4 hour, 1 hour, there I'm simply going there to look for confirmations of what I'm seeing on the high time frame. So this is your 4 hour. 4 hour, I like it in the sense that you can actually draw some clean structures on 4 hour. If ever, let's say you want to use your trend lines, you can actually give you some beautiful trend lines 4 hour. Check this. This is an upward channel. That's an upward channel. Me, obviously, now, because of now experience, I don't need to draw this, but just for the sake of others, I can just draw this trend line. So now, this upward channel, it can actually be the one to guide. Let's say you want to sell, right? Because I can also see another resistance here. If you look closely, resistance as well there. So that resistance, it's also something that is going to help. So once the market opens, it can actually push into this resistance. Once it pushes there and rejects there, before selling, you can wait for something like a break here, either this 4 hour break, or you can get a lower time frame breakout. If you get a lower time frame like your 1 hour, your 30 minutes, if you get a breakout there on lower time frames, you can as well enter. Or if you get some confirmations on those lower time frames, some confirmations of bearish pressure, you can also enter. So this is the first probability for it to fall here before continuing up. Then if ever it breaks that resistance now, we simply expect a retest into that resistance and a continuation up. So those are the two main probabilities that I'm looking forward to on US30. Those are the two main probabilities that I'm looking at for US30. If you check this trend line, this was actually an entry point. People will actually tell you and lie to you that trend lines don't work. Those people, they are still immature in the game, because in this game, it's all a matter of combining confluences. The more confluences you have on a trade, it means that the probability of that trade. This trade at a trend line, it had a support after the break and retest. This was a beautiful entry on Friday. Beautiful buy entry, this one. So now I'm looking forward to see how the market is going to respond to this level, because it's also a resistance. Once it breaks there, remember, once it breaks there, we are looking forward to the next level, which is this one. So I also have a demand here. This is a demand zone here. Demand zone here. You can tap into the demand before going up. So once it taps into that demand and rejects, we can take our buys targeting that top. Once we get to that top, we wait and see lower time frame, 15-minute, 30-minute confirmations. If you ever get selling opportunities, we take them and go down with them to those levels that I spoke about. So on the lower time frames, what you'll simply be expecting or simply be wanting to see, you'll simply be wanting to see something like a shift. A shift, I'm referring to a shift in market structure. This is a higher high, higher low, higher high, higher low. So you'll be expecting something like a higher high, let's say a higher low here. Then here, if it fails to give a higher high, something like this. So the shift now, once the shift happens, you are in and you go all the way with it. So this is just a glimpse of how I really analyze. This is just a glimpse of how I really analyze. I go deeper, obviously, but this is just the overall basic market structure of what we're looking forward for. Once it tests into this demand and rejects, one can actually take buys to this. Once we reject it there, we simply wait for confirmations before selling. Before just like what I showed you. So US30 so far, this is what we're looking at. I'm simply now waiting to see if this market comes into this demand and rejects, I'm going to buy up until this zone. If we break that resistance, I'm simply going to wait for either any chart pattern to form or a retesting that support now before we continue all the way up. So that's my that's my bias so far. That's my current bias right now on our US30. That's my current bias right now. So any questions on US30? Any questions? Any questions, sir? Okay.
Are you hearing me?
Your network is breaking. Your network is breaking. I can't even hear you clearly.
Oh,
Your network is breaking.
yeah.
Right. Just a look on gold. Another lookout on gold. Gold daily time bullish. We have been bullish ever since November 2022, last year. We've been bullish. This is a bullish market. Bullish market.
So for now on US30, we are waiting for buys, Ras.
Yes. Yes, we are waiting for buys.
Oh, it's okay.
So gold, if you check this is a bullish market. This is a bullish market, as you can see. So now, in that bullish market, you remember when we come to the top of the channel, we expect the market to drop. So now, looking closely, if ever we zoom in, we see that there's a support that the market is failing to, is rejecting on. So simple thing, if you check for the last week, if not the last 2 weeks, gold has been consolidating, but it's been consolidating, even though we managed to take some trades that made us money, but it was consolidation. This is consolidation. For the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is 2 weeks. Can you see it? Yes. This is consolidation. So how do you trade the consolidation now? The best way now for gold is for us to wait for the breakout of this consolidation, right? If it breaks to the downside, we'll take our sells. Our sells, our first target is this trend line here, right? Once you take your sells into that trend line, you wait for the rejection. If it rejects, it means to simply continue with this upward channel up until I don't know when. But so far, we're in a consolidation. Once that consolidation is broken, that's the best time to enter. That's the best time to enter. So gold, I can't go anywhere from this because we're in a consolidation, as you can see. This is a consolidation. The best way for gold right now is for us to simply fold our hands. Let's see what it is going to do on market open. Is it going to break to the downside? Once it breaks to the downside and confirms that it is definitely broken to the downside, it means we take our selling opportunities. Our selling opportunities to what zone? To what zone? If ever it's going to continue going up, if ever the market is going to continue going up, we have to look at our Fibonacci, point A, point B at the top there. So if ever it's going to go down and give us a retracement, 61.8, somewhere around those zones, that's where we expect it to reach. So meaning if ever we're taking ourselves, we're taking them targeting 61.8 here. Because according to market structure, this was a higher high here. That's a higher high there. The higher low, I mean, this is a higher high here. Higher high, higher low. Then this one, according to us now, is it broken here? I can't see clearly if ever this market is broken below. But if ever it breaks below this one, this will now be a new higher high. Once you now have a higher high, market must drop. This is our understanding. Once we now have a higher high, market must drop. Dropping is simply dropping to create a what? A higher low, a low that is higher than this one. So that will be your buyers. So you'll be expecting the drop. So yeah, it can even come back to test this high, which is now a double top before maybe dropping. This is very possible before dropping like this. This is also possible. So even if it breaks to the upside, one can take partial buys into this resistance there, which is also this high here. So once you do that and you get some confirmations and confluences on lower time frames. So the matter here, remember the issue is simply about having quite a number of confluences on your analysis. If ever you can have quite a number of confluences, it means your trades are also going to be high probability trades. So already we see we broke this. So it can even come here. It will simply be retesting this trend line. Once it comes there, you can take yourselves targeting 61.8 there. 61.8 there. That would be your target, which is also a zone where there is a trend line. So it will be a Fibonacci 61.8 as well as a trend line. So that is a double confluence. That is actually a double confluence. So gold is simply waiting time. It's simply waiting time. I can't even go deeper from now. It's simply waiting time. When in a consolidation, we simply wait for the break of the consolidation. But so far, we can see that we have been in a bullish market ever since November 2022. Ever since November 2022 here, actually broke the lower high was broken here around September. This was the lower high. After breaking the lower high, we create a what? We create a higher high. After creating a higher high, market must drop. Dropping, it drops into any level of support or any fair value gap or any order block. So here it dropped into the support. After dropping to the support, established a double bottom. So you could have bought here the first time, second time, you could also bought as well. So this was your, here it actually gave a same low, meaning it failed to establish a lower low, meaning the buys were the ones in control now. So you could have taken this buy here. This was so this trade, it's actually a trade that actually. So now if ever you follow now the strategy that we use now, according to Smart Confluence Trading 3.0, according to Smart Confluence Trading 3.0, this trade, one could have actually scaled this trade following market structure. You could have actually right now, if you check higher highs, higher lows, higher structure was never broken. Higher highs, higher high, higher low. Let's say higher high here, then here it broke the higher low. So here upon the break there, according to our smart confidence trading 3.0, that is where now we'll be looking forward to look for any selling opportunities. Obviously, that will be a pullback. So you could have held this trade since November to January. Obviously, when someone is still when you're trading a small account, someone might not be able to do that, but you can reach a certain level of trading whereby you actually have an account where you do position trading. Position trading is the one that you actually follow market structure up until it's broken. Like if ever you follow this market structure up until when it was broken here, you would have actually came out here. So coming out there, you're simply waiting for a pullback, which is this move. How do you know that the pullback is over? You also follow market structure. Follow market structure, lower low, lower high, lower low, lower high, up until the lower high. The lower high, upon the break of the lower high, the break of the lower high, you know that this pullback has ended. Break of the lower high, pullback has ended, came back to retest, just in entry. Are we together, Mr. Gaspo?
Yeah, I'm listening, sir.
So if ever we follow market structure from here, that's a higher high, higher low, higher high, higher low, higher high here, higher low here, higher high. So now we have this higher high and we have this higher low. So now for sales to be confirmed, it has to break this higher low. Same way it broke this higher low inside here, right? You saw after breaking the higher low, the sales, they happened. So after breaking this higher low, sales can happen, right? So that's my higher high and that's my higher low inside there. That's internal structure now. So once it breaks there, once it just breaks here below and closes below, once this candles close below this zone, I know that the sales will happen and they will happen to this zone. I'll take the sales from there to this zone. So now this is the high. So even if it comes back to this high and rejects there, we can take our sales from there. So from here, if it rejects, we'll take our sales from there up until we reach here. First scenario. Second possible scenario, breakdown. So second scenario as well. So those are the scenarios that I'm looking forward for gold. Any one of those scenarios will make money with it. So that is it for gold. Any questions before we move on to our crash and boom?
Breakouts, that's it.
Your network is breaking. You can type. Your network.
Okay, let me type.
Type, yes. Let's look at the boom 500. Boom 500, we'll go to crash 500, and finally VIX 75. So boom 500 daily order flow is bearish. Order flow is bearish, and we are at a strong level. We're at an order block there. One can call it an order block. One can call it a supply, very strong supply, and we are in a bearish order flow. In a bearish order flow, according to our strategy, we expect the market to continue respecting the order flow. So according to me, this market must fall. According to me, this market must fall, obviously, after lower time frame confirmations. Once you get the lower time frame confirmations for this sell, because remember, on lower time frames, it's actually been uptrending, right? Of which this uptrending, according to the daily, was simply a pullback into this. So once we get lower time frame selling confirmations, we can actually take ourselves and hold all the way to this low. Personally, I'm going to hold all the way to that bottom because I understand market structure at a deeper level, and I know when order flow is being respected, the market will continue respecting the order flow up until I don't know when. So even if you want to use your trend lines, it's okay, use your trend lines. You can see that this market was actually, this is an upward channel. So whenever you're following trend lines and channels, so these things, they're actually in confluence. They're actually in confluence. So we're now at the top of the channel. We expect what? A drop to the bottom of the channel. That is your understanding when you're trading channels. Then once we break, if ever we break, you actually expect a retest, then this is your understanding, obviously, based on channels. So whichever way you want to look at the market, whether you want to look at it in the advanced way that I now look at it, or you look at it in your basic price action way, yeah, we're all going to make money. You just need to make sure that you have mastered your price action to the extent that you can now see the market more clearly. So this one, I'm actually seeing a very beautiful long-term sell on Boom 500. Very, very, very beautiful long-term selling opportunity, right? So let me just remove this. I don't need this. I don't need this. So now for our, we can see that the bullish movement, higher, high, higher, low, higher, high, came to the same higher low, failed to break the higher low there, higher, high. So how is it going to confirm ourselves if it breaks this higher low? If we pull back, something like this. We're now going down in the long run for forever. So far the target, the main target right now for the sales that we might take based on lower time from confirmation. The first target right now is this zone. Yeah, say, can you please mute your mic, say?
Apostle Tony is like too high.
Right, so this will be my first target because this is a higher low. So long a higher low is not broken, the market can still continue to push up. That's the danger of it. For example, here, if you remember last week, last week we took sales on Boom 500. If you remember, according to our signals, I actually gave a sell signal. So that sell signal, how did I get it? How did I get that sell signal? I got it around this zone, obviously based on lower time frame confirmations. The first confirmation was this major zone that I saw on the daily. The second was lower time frame confirmation, which was 15 minute, 30 minute. Once I got the shift, that's when I said, guys, let's sell. Sell was valid, even though the market failed to break this higher low. So had it broken this higher low, had this market broken this higher low here, we knew that our sales were going to continue. It was going to do something like this, continue, pull back, and it was going to continue selling forever. But it didn't happen. So now we are now waiting for this next higher low to be. If it breaks this one, you'll see what is going to happen. This trade, once it breaks here, you'll see what is going to happen. It will sell forever and continue selling. There, that will now be a guarantee to now hold. So now all we now need to do is to go down to lower time frames. Once we are on lower time frames, all I need to do is just to see a shift. Once I see a shift in market momentum from bullish to bearish, for example, last week, where was the shift? Okay, let me just label the higher low. The higher low, according to what we saw there on the 4 hour, it was this one. So it had to break this one, which it didn't break, right? So this was the higher low. Higher low, where was the higher high? Higher high here, right? From the higher high, how did I get the sell entry? How did I get the sell entry? Let's follow market structure from this higher low to the higher high. Higher high, higher low. See a high here, higher low, high there. So from this high now, check, we broke the inside higher low, which is an internal structure. Upon the break there, that was my first sign to say what I want to see is firstly happened, right? After breaking this internal structure higher low, All we now need to do is to wait for a pullback. Pullback where? Pullback into a supply, order block, support, resistance, I mean, fair value gap, order block, or resistance. Once we pull back, so now after this pullback, that's where we entered. We entered there. So now the target now, when you enter there, if ever you want to be smart with your targets, you just look to the left, you enter here, look to the left, where is your swing low according to this internal structure here. You can use it. This is first target, second target according to this one. So you check, came down, retested, pull back, down, first target reached, pull back, second target reached. So you just need, so when the market is pulling back, don't be, you actually need to be patient enough to know that that is simply a pullback. For example, here, it pulled back. So me, what I do whenever the market pulls back like this, especially if it pulls back into a supply like this, I scale in more trades there. If it pulls back again like this, I scale in more trades there. As I scale in now, my stop loss is now different. For example, my stop loss when I entered there, my stop loss when I entered here, it was above here. When I enter here, my stop loss is above here. When I enter here, my stop loss is above here. So you see my stop loss, it will always be different depending on the entry. So entry 1, entry 2, entry 3. 3 strong entry points that you could have gotten. Target, it failed to break this higher low, right? So now we have this new higher low here. The market has to break this higher low for it to sell long term. For the market to sell long term, it has to break this higher low, right? So let me look now to the internal structure. Has it shifted any internal structure for one to enter? Let's see. We have this higher low. This is internal structure now. Higher low internal structure, right? It has to break that one. Once we break that higher low internal structure, after it's broken, wait for a pullback. You can use your Fibonacci, you can use your trend lines, you can use your support and resistance. Once you get a pullback, you can take sales. First target is this higher low, because if it's not broken, the market will simply come to it and continue going up, because it will still be obeying that higher, that bullish order flow. So now it has to come and break. Once it breaks here, once it does something like this, break here, we know that we are now selling long term. Once you get a pullback, you are simply holding those sales long term. So you can only hold trades long term after these external structures have been broken. So now, even if we take sales, if we get confirmations and take sales, those sales are only going to last up until around this zone. I can also see I have a demand here. That can also be a zone that you look out for the targets. That's just in case the market wants to still push up. But I'm not expecting that, because of what I showed you on the daily, that we are on the daily, we are in a bearish order flow. So I'm expecting the market on the lower time frame to now also shift its order flow from bullish to bearish. Order flow is only going to be shifted from bullish to bearish up until when we break this higher low. That is when the order flow will now be fully bearish. So far, even if we take any sales, they are not going to be long term. They will simply be sales that will be. So if you check here already, you can see it's giving you some structures already. And I like what is happening. It's actually, so someone could have actually taken a sell here. If you go to 15 minutes, that is actually a supply there. Someone could have taken a sell there. Here, this is also a supply. Someone could have taken a sell here. So now the next entry point. That's why I tell you, you don't just enter anywhere. There are entry points, specific entry points that are designed to be entered. So if it breaks here, it can give a pullback either into this trend line. If it gives a pullback into this trend line. So where is my next entry point now? My next entry point, it can pull back into this supply. If not this one, we also have this one that was left behind. So this or this one can be our next sell entry point. all you need to do is wait for the market to reach the zone. Once it reaches the zone, wait for a rejection. Once it rejects, then you enter. So around this zone or that zone, we're going to. So usually now, based on experience, it usually takes out this liquidity. This is liquidity. This is liquidity that will be building up, right? It usually takes out that liquidity. So now, based on experience now tells me that, so according to experience, you can see that already we have some breaks here. This is a break of structure here, or a change of character, whatever you want to call it. So after this, the market now, this move here, it was simply liquidity generation. After liquidity has been generated, it will come and tap into a zone that it never tapped into. For example, this order block, this is a strong order block because it took out liquidity here. Strong order block. So it will pull back into the order block, then go down. So right now, sales that we are going to enter, we are going to sell here. Sell there. Where is our stop loss? Our stop loss is just above the zone. Just above the zone. Just above the zone like this. This signal I'm actually going to give it. If I will not be sleeping, I'll give this one. And I don't usually sleep whenever they are. Whenever I'm waiting for a move, especially a move that I know that is going to happen in the next few hours, I don't usually sleep up until the move has happened. So personally, I'm going to wait for this opportunity. My first target will be this higher low. So this is the current move right now that I'm waiting for on the boom. Say my question is on the identification of internal structure. Is it that the 1 hour structures are internal structures, or internal structures are just no? It's not a zoomed in version. No. It has nothing to do with zoom in or zoom out. No. Internal structure, I'm referring to the structure itself. The structure itself. This is something that is deep. We actually teach it in the mentorship class. That's why I said the analysis that I'm doing here, it's simply just a rough analysis just to make sure that I cover, but it goes deeper than what I'm actually showing you. Internal structures, external structures, all of that is covered in the mentorship class. And it's something that I might not reveal here on these public videos, because it's information that others have actually paid so much money for it. So it's a lot. Internal structures and external structure. Once you can identify that,